Hello everyone. I'll cover chapter 5 in this lecture. This chapter is about types of insurers and marketing systems. These are the concepts that we will cover in this chapter. So we start with an overview of the financial services industry. So there are many institutions which are involved in financial services industry, including banks, credit unions, insurance companies, pension funds, and so on. This is a snapshot of the insurance industry in the US. The size of the insurance market in terms of the companies involved in insurance industry. Primarily, there are life and health insurance companies, as well as property and casualty insurance companies. These are what we call the private insurers. These are some of the leading life and health insurers, and these are the leading property and casualty insurance. These facts are for the US market. So there are different types of private insurers. We will discuss each of them in detail subsequently. The first is stock insurance. In this case, the insurance company is owned by stockholders, and the objective is to earn profits and reward stockholders. The other major type of private insurer is a mutual insurer. In this case, the company is owned by the customers or the policy holders. In this case, we don't have a separate class of shareholders. So there are three main types of mutual insurers. The first one is the advance premium mutual insurance. So it is owned by the policy owners and they pay premiums as part of the insurance company's business. The assessment mutual also has policy owners as the owner of the insurance company. But in this case, the insurance company has the authority to demand additional premium or additional funds from the policy owners in case its financial operations are not in good shape. A fraternal insurer is a mutual insurer which provides life and health insurance to members of a social or religious organization. It's a special type of mutual insurance. But we see an emerging trend among mutual insurers. The first one is consolidation. Many mutual insurers are merging and trying to create bigger insurance companies. Then there is a trend towards demutualization. That is, the company which used to be owned by policy holders is now becoming a company owned by stockholders. In case the mutual insurer is not able to convert to a stock holding company, it creates a mutual holding company. So the mutual holding company is a mutual insurer and it has subsidiaries which are owned by stockholders. So this is the typical structure of a mutual holding company. So the mutual insurer sits at the top and there are common stock companies which are its subsidiary and they do insurance business. But Lloyd's is not an insurer per se. It is actually a leading insurance marketplace. So the members of Lloyd's, they can create underwriting syndicates and provide insurance to their customers. And there are other characteristics of this insurance marketplace. A reciprocal exchange is a special type of arrangement. So here the members provide insurance policies to each other. So maybe member 1 provides insurance to member 2. In return, member 2 will provide insurance to member 1. So this is a special type of insurance arrangement. In the US, we also have Blue Cross and Blue Shield. They were originally non-profit organizations and they were supposed to provide healthcare insurance to the local community. So different states have Blue Cross and Blue Shield organizations. So what we are nowadays seeing is that many of these Blue Cross and Blue Shield organizations are merging to create larger insurance entities. And some of these have even given up their non-profit status and become for-profit entities so that they can become more competitive in the industry. Another type of private insurer is managed care plan. So in this case, the company not only provides finances for healthcare expenses, but they also engage with the customer to decide on their healthcare decisions as well as to control costs. Some of the typical types of managed care plans are HMO, POS, and PPO. A captive insurer is owned by a parent firm and it provides insurance cover for the parent's loss exposure. It could be owned by a single parent or a group of parent companies. The savings bank life insurance refers to life insurance provided by mutual savings bank directly. That's all for this part of the chapter, and I will continue with the rest of the chapter in the next lecture. Thank you.